Hi guys, we are back with discussing the next steps in our UK tax computation. In the last session, we understood how personal allowance is calculated. Today, we'll turn our attention to other allowances and the remaining parts of calculating the taxable income and then, of course, the tax of an individual. Now, what we are going to learn today, first of all, is called as the marriage allowance. Now, who said that marriage does not bring with it any economic benefits or any taxation benefits? Of course, it does. So, if you are a married couple in UK, you get quite a lot of relaxations and benefits, marriage allowance being the first of them. Okay, what is this? This is the transfer of personal allowance by a spouse to another spouse. So if one spouse has an unused personal allowance, then that unused personal allowance can be transferred to the other spouse. What does that mean? Every individual is entitled to a personal allowance of 12,570. But if a spouse has unused personal allowance, then that can be transferred to the spouse, to the husband or the wife. And this transfer is called marriage allowance. Okay. Now, there's a husband whose name is Amitabh and the name of the wife is Jaya. The wife is an extremely angry person who keeps on snapping at no reason. For no reason, she keeps on yelling at people. And Amitabh doesn't seem to care. Jaya's income is £6,000 and Amitabh's income is £30,000. Okay. Now, Jaya as an individual is entitled to a personal allowance of 12,570. But what is her total income? Her total income is 6,000. So, she is entitled to a 12,570 personal allowance, out of which she claims a personal allowance of 6,000 here. And that means out of 12,570, 6,000 is used. That means 6,570 is still unused. But the thing is, see, Jaya is allowed to transfer her unused personal allowance to Amitabh, but she cannot transfer the entire unused amount. In her case, the unused amount is how much? The unused amount is 6,570. But she cannot transfer the whole of unused amount of personal allowance to Amitabh. She can only transfer 1260. Okay, so out of 12,570, she used 6,000 for herself. She can only transfer 1,260 to her husband. And what happens is, look at Amitabh's computation. You subtract his regular personal allowance here. Okay, then after that, you get taxable income. Then on this taxable income of 17,430 at the basic rate band, you calculate tax at the rate of 20%, which is 3,486. Now, the unused personal allowance of Jaya, which she transferred to her husband Amitabh, does not get added to 12,570. Okay. For the recipient spouse, PA is not increased. Remember that. But his tax liability is reduced by 1,260 into 20. So a marriage allowance has the effect of reducing the tax liability of an individual. Okay, it does not get added to the personal allowance. Please remember. For this to apply, both the spouses have to be basic rate taxpayers. Okay, if they are not basic rate taxpayers, then this will not work. From the transferee spouse, and what happens from the transferor spouses? His personal allowance gets reduced by 1,260. It doesn't matter how much was the unused amount. Okay, that is not critical to this discussion. It doesn't matter how much was the unused amount. What matters is that only 1,260 can be transferred. Okay, and for the recipient spouse, the Amitabh was the recipient spouse, right? His personal allowance will not increase, but his tax liability will reduce by 1,260 into 20% in all cases. Let me show you another case. Okay, Amitabh now earns 30,000 income and Jaya's income is 12,000. Okay. Now Jaya's income is 12,000. You will agree with me when I say that Jaya is entitled to a personal allowance of 12,570. Her income is 12,000. Now if she is entitled to a PA of 12,570, she could very well subtract 12,000 here, make the income zero. But she does not want to do that. She wants to transfer. That doesn't make sense, right? She wants to optimize the tax position, so she wants to transfer a part of her personal allowance to her husband. Okay. Now you might say that, you know what? Let us subtract 12,000 here and let us transfer 570 to Amitabh. Again, the answer is no. you cannot transfer any amount apart from 1260. The only transfer you are allowed to make is 1260. Okay, 1260 of personal allowance can be transferred. How much was she entitled to? She was entitled to 12,570. Out of that, 1260 she is transferring to the husband. How much is she left with? She is left with 11,310. How do I arrive at 11,310? Total PA 12,570. PA used up is 1260. How much personal allowance is left? 11,310 is left. She will get a personal allowance of 11,310. That means she will still be left with a taxable income of 690, and on that you have to calculate tax. Again, when it goes to Amitabh, Amitabh's personal allowance will not increase, but what you will do is from the total tax liability, you will subtract marriage allowance, which is 1260 into 20%. Now, if remember one thing, transfer of personal allowance cannot be of any amount apart from 1260. Here, the unused amount was 6570. Still, she could not transfer a higher amount. Here, the unused amount would have been only 570 in normal circumstances. Still, she cannot claim full 12,000 here and then transfer 570 to the husband. No. If you want to transfer personal allowance from one spouse to another, the amount is fixed. You can only transfer 1260 from the transferor spouse to the transferee spouse. And when it goes to the transferor spouse's computation, the amount is not added to PA. Rather, you do 1260 into 20%, 252. You subtract that as marriage allowance, and then the remaining amount is your tax liability. As we discussed, for marriage allowance to apply, both spouses have to be basic rate taxpayers. Remembering the dates for your exam is not that important. By which date, do you have to make the application or election? That's not so important. But yes, the provision, of course, is very, very important. I want us to look at a question here. Okay. Aljaz and Tala are married, and Aljaz is employed and earns a salary of 35,500. Tala spends most of her time looking after their two children but works on a Saturday, earning an annual salary of 8,000 pounds. They do not have any other income. Tala makes an election to transfer the marriage allowance to Aljaz. Calculate Aljaz and Tala's income tax liabilities for tax year 24-25. Now, pay attention. See, Tala has an Tala has a Tala has annual salary of 8,000. She is entitled to a personal allowance of 12,570. So after using or after deducting 8,000, she is still left with an unused amount of 4,570. But she cannot transfer 4,570. She can only transfer 1260 to her husband. Okay. For Tala, the tax liability will be 0. Now think about Aljaz. Okay. Now for Aljaz, what is the total salary or employment income? 35,500 per annum. Okay. From this, you will subtract his personal allowance minus 12,570. Now, although Tala has transferred PA worth 1260, this does not increase the recipient spouse's PA. Okay, so that remains 12,570 only. Now, what are you left with? You are left with how much is the taxable income? 22,930. Now, all of this is non-savings income, correct? So, the non-savings income will be taxed at 20%. Tax at the rate of 20%. Non-savings income. This into 20% less marriage allowance minus 252. This is the amount that you will be allowed to subtract. And what are you left with? You are left with tax payable of 4586 minus 252, which is 4334. Tax liability is reduced by 252. Okay, no other change happens. Now, let's understand the concept of relief. Now, what is a relief? A relief is anything that ultimately helps to reduce the overall tax liability. Now, let's think of qualifying loan interest. If a taxpayer takes a loan for a specific purpose, then interest paid on such loan is used to reduce overall tax liability. If it is taken for certain specific purposes which are allowed as per tax authorities, then the interest you pay on that will be interest paid on such loans is used to reduce overall tax liability. Let's see how this works. If an employee takes loans for purchase of plant or machinery for use in his employment. I have purchased a laptop which I'm going to use for my work. That is plant and machinery for use in employment, or purchase of shares in an employee controlled company by a full-time employee. What is an employee controlled company? A company in which 5% or more shares are held by one or more employees together. So if an employee borrows funds to purchase an asset which is going to be used for his employment, or he purchases shares in an employee controlled company which are going to be used for, so he borrows money, he uses that money to purchase shares in a company which is an employee controlled company, and this person is a full-time employee, then the interest on that loan will be allowed as a deduction. Or if you are a partner in a partnership firm and you borrow money to invest capital in the firm or for giving a loan to the firm, then purchase of plant or machinery for use in the partnership firm by a partner. So if I borrow money to invest in the partnership firm, interest on that loan is allowed. Or if I purchase plant or machinery for use in a partnership firm, I am a partner, I take a loan, I use that loan to purchase plant and machinery, which is going to be used in the partnership business. The interest on such a loan is also allowed. And how does the relief operate? The amount of interest paid in the tax year is reduced from total income. Okay, this is the mode of operation of relief. The amount of interest paid in the tax year is reduced from total income. Let's have a look at a simple question to illustrate. Anwar and Meela both have total income of 54,000, none of which is savings or dividend. ठीक है, they made the following interest payments during the year. Anwar made interest payments of 2,000 on loan borrowed for his private residence. Meela made interest payment of 2,000 on loan taken to invest in a partnership firm in which she is a partner. See, Anwar used this loan for purchasing for his private residence, and he paid interest on that. That amount of that loan does not qualify. Okay, so if I were to look at this data, see, total income of both is 54,000. Okay, less qualifying loan interest. How is the benefit given? Amount of interest paid is reduced from total income. See, Anwar made the interest payment on a loan which he had taken for his private residence. Now, if you observe, that particular type of loan does not fall under the allowable categories. So this will not be deducted. But Meela made interest payment on a loan that she had taken to invest in a partnership firm in which she is a partner. So subtract that. What are you left with? You are left with now your net income. Okay. Now subtract personal allowance. How much is the personal allowance? Minus 12,570 minus 12,570. then taxable income. Okay, now this is all non-savings income, right? So non-savings 37,700 at the rate of 20% basic rate. 37,700 into 20%. Then look at Anwar. Okay, total income is 41,430. 37,700 has been taxed in the basic rate band. Okay, how much is the amount of income not yet taxed? 41,430 minus 37,700. 3,730. Okay, so non-savings 3,730 at the rate of 40%. This is higher rate. Okay, so pay attention, 41,430 minus 37,700 into 40%. Okay, and for Mila, what is the amount of income that is not yet taxed? Her total taxable income is 39,430, out of which 37,700 has been taxed in the basic rate band. So how much is not yet taxed? 39,430 minus 37,700, 1,730. So this will be taxed in the higher rate band. Okay, 1,730 into 40%. You have 692 and then my total tax liability. How much does that come down to? That is 7,540 plus 1,492. 9032 and 8232. Okay, pay attention, understand how exactly have we calculated the impact of relief. Remember, an employee taking a loan to purchase an asset which is going to be used for his employment, allowed. An employee taking a loan, that loan being used to purchase shares of a company which is an employee trading company, or sorry, employee controlled trading company, that is also allowed. Or if you are a partner and you have taken a loan in order to uh, invest in a partnership firm, allowed. If you are a person who is a partner in a partnership firm and you have taken a loan to purchase an asset, that asset is going to be used in the partnership business, then also allowed, and amount of interest paid in the tax year is reduced from total income. Okay. Now, let's understand a concept called withholding tax. Okay. Now, what is this concept of withholding tax? The idea comes from the fact that convenience of the government is also very important. What do I mean by convenience of the government? See, the government of India has how many people? It has like 1.4 billion population. Out of that, assume that around 10 lakh people are employees. Now, the government thinks, how hard is it for me to keep a tab on the employment income of these 10 lakh people and then following up with them for tax payment. So what the government has done is the government has put the responsibility on the employer. Okay, so I am an employee of Plutus Education and my total income is, say for example, 50 lakh rupees. Now, based on that 50 lakh rupees, my tax liability has to be, say for example, 5 lakh rupees. Now, Government of India will find it very difficult to keep on following up with Satyamed, with Navansh, with 50,000 other people, asking them to make their tax payments on time. So what the government does is it tells the employer, why don't you deduct tax from these people's salary? So if Plutus is supposed to pay me 50 lakh rupees, it deducts 5 lakh from my total amount, total payable. It pays only 45 lakhs to me and the remaining 5 lakhs it collects from me. It withholds that from my salary and deposits that amount with the government of India in my name. Okay. In India, we call this tax deduction at source. And in some other countries, like in the UK, for example, we call it withholding tax. Now think about it. It is easier for the government to keep a tab on one employer and ask him to be answerable for 1,000 different employees and their tax payments instead of following up with these numerous employees and then losing out on tax collection in the process. This activity that we described just now is known as withholding tax or tax deduction at source. Now, what the employer does is the employer deposits this amount on your behalf with the government of India. Okay. And then later on, when you file your return, when you submit your annual details, at that time, see, my tax liability comes down to 55,000. But my employer had already deducted 50,000 and deposited that amount with the government of India. So my liability is 55, but my employer has already deposited 50,000 with the government. So how much more do I have to pay from my pocket? I only have to pay 5,000 from my pocket. Think about another situation. What if my actual liability comes down to 48,000, but around 50,000 has been deposited with the government? Now I will claim a refund, or I will claim a repayment of that 2,000. So that adjustment is allowed at the time of filing of return. I want you to go through this carefully, read it once, and absorb the concept, and then we'll discuss some other aspects of withholding tax. Okay, please read it carefully. I hope you read it now. Let's look at another question where they want us to calculate the tax liability. Now, in the United Kingdom, they this tax deduction at source that they have done, they also call it your PAYE credit. What is PAYE? Pay as you earn. When you earn the income, your employer deducts it and he deposits that with the government or HMRC. Now, Devansh gives you the following information for tax year 24-25. Okay. And you have trading income, employment income, and qualifying interest payment. They want you to calculate the tax liability. Now, pay attention. Let's get his income details in place. What is his trading income? Trading income is 26,000. To that, you will add employment income. How much is that? 29,950. Okay. From this, I'll have to subtract qualifying interest payment. How much is the qualifying interest payment? 4,000. So let's get our total income, which is 26,000 plus 29,950 less qualifying interest payment minus 4,000. What do you have? You will get his net income. From that net income, we'll have to subtract the personal allowance. Okay. What is my net income? 51,950. Okay. Less personal allowance. 12,570. What are we left with? We are left with a taxable income of how much? 39,380. Now we know that our basic rate band is 0 to 37,700. 37,700, 1 to 125, 140 is our higher rate band. This person's taxable income is 39,380. Correct. So 37,700 will be taxed at the rate of 20%. This is non-savings income, basic rate band. 37,700 into 20%. And 39,380 is the total taxable income, out of which 37,700 was taxed in the basic rate band. How much is left? 1680 is left, which will be taxed at 40%. This is non-savings income. Okay, how much is the amount of tax liability on this? Minus 37,700 into 40%. Okay, so total tax is 7,540 plus 672, which is 8,212. But the question mentions that there is this PAYE credit, which is what we discussed with respect to the withholding tax part. So that amount will be adjusted, okay? And you will only have to pay the balance amount. How much is this? 3,620. What is tax payable? Tax payable is 8,212 minus 3,620, which is 4,592. So whenever you have your PAYE credit given to you, subtract that from the total tax and you will arrive at tax payable. Okay. Go through the question and I would recommend you to practice it so that your tax calculation part gets stronger. Now, if an individual makes a charitable gift, be it India, be it any other country, they want to reward those individuals who have been making a positive contribution to the society. So, what UK tax authorities do is if you are a basic rate taxpayer, relief is not given by way of reducing income or by way of reducing tax liability. Instead, HMRC gives you a relief at source. Okay, how does that work? Say, for example, there's a person called Navansh and he wants to give certain amount to charity. Okay. Navansh feels that I want to make a positive contribution to society and he wants the charity to receive 100 pounds. What HMRC tells him is, we appreciate the fact that you want to give 100 rupees to charity, but you don't pay all 100. You transfer only 80. The remaining 20 we will contribute from our pocket and that will go to HMRC. So this is how a charitable gift gets a basic rate tax relief. Okay. So the tax relief is given at source, where if the donor wants the charity to receive 100, he is only required to transfer 80 out of his pocket, and the remaining 20 is contributed by HMRC. Now, if you are a higher or an additional rate taxpayer, relief is not given by way of reducing income or by way of reducing tax liability. Instead, HMRC gives him a relief at source by way of extension of bands. Now, what is this extension of bands, and what is the whole discussion all about? Let's try to understand, but through a question, not through, just oral calculations. Okay. Let's see how the grossing up part also works. And Brenda has employment income of £55,000 and she pays 3,600 to RPSB, which is a registered charity under the gift aid scheme. Calculate her tax liability. Okay. Now Brenda pays 3600. Okay. Brenda has paid 3600. Okay. That means 3600 is the cash outflow from her pocket. Now, in case of charitable gifts, relief is not given by way of reducing income or by reducing tax liability. HMRC gives him a relief at source, and HMRC gives additional relief by way of extension of bands. Now, let's understand how this works. Okay, so the idea is whenever a person pays X amount to a charity, a HMRC makes a contribution from its own pocket. Okay. Now, so if a person wants the charity to receive 100, HMRC tells the person, we will support you in this. You pay 80, we as in HMRC will contribute 20, charity will get a benefit of 100. Okay, so here Brenda has paid 80. Brenda has paid 3600. How much benefit has the charity received? Okay. That will be the gross amount. Okay. Now let's see how this part also works. Okay. So gross, then deduction, then net. Okay. Let us take some assumed values. Gross is 100. Deduction is 20, net amount is 80, right? When I say deduction, means amount paid by HMRC, actual. How much is the cash outflow? Cash outflow for Brenda is 3600. Okay, so what is the gross amount? The gross amount is 4500, which is cross multiplication. 4500 is 3600 into 100 by 80. Okay, that means this is 900. Now, let's understand how does this help? First of all, now we know how much amount was paid by HMRC. Now, this gross benefit, okay? The tax bands will be increased by the amount of gross contribution. Okay, so if basic rate band is 0 to 37,700, then updated basic rate band becomes 0 to how much is 37,700 plus 4,500, 42,200. So the basic rate band becomes 0 to 42,200. And if higher rate band is 37,701 to 125, 140, then updated higher rate band is 42,201 to 125, 140 plus 4,500, which is 129, 640. Okay, so these are my updated bands. Earlier, my 37,700 worth of income was getting taxed in the basic rate band. Now, 42,200 worth of income is getting taxed in the basic rate band. Okay, so how will I calculate the tax liability? Employment income of 55,000 pounds. Okay, so employment income 55,000 pounds. Okay, then less personal allowance 12,570. This will give me my taxable income, which is 42,430. Now my updated basic rate band is 42,200. Okay, so non-savings 42,200 at the rate of 20%. 42,200 into 20%. Basic rate band 42,430 is total taxable income. Out of that, 42,200 got taxed in the basic rate band. So 130 is left that will get taxed in the higher rate band. 52. Now imagine if there was no extension of bands, what would have happened? Okay, this is tax after extension of bands. What if extension of bands had not taken place? Okay, then in that case, these calculations would have been different. Your bands would be 0 to 37,700. So 37,700 at the rate of 20%. Now, if 42,430 is taxable income and 37,700 is taxed in the basic rate band, then 4,730 has not been taxed yet. That will be taxed at the rate of 40%, right? So my tax liability would have been 7,540 plus 1,892, 9,432. So combine the two and see how much amount did you end up saving because of the extension of bands. Tax saving due to extension of bands. How much is that? 9,432 minus 8,492. How much does that come to? 940 correct? So, what has effectively happened is that there has been a reduction in the amount of tax paid, correct? Is this done correctly? 13. Let me just check, okay, whether I have done the calculations correctly or not. Sorry, it's not. This is 8532. There was some calculation mistake. So 8532 and 9432. What is the difference? The difference is 900. Okay. Now look at the total contribution, or look at the gross contribution to charity, not the net. Look at the gross amount. How much is the gross amount? 4500. Now 4500 into 20%, that is your basic rate. Does that not give you 900? So by doing this, ultimately you are reducing tax liability, but you will not reduce the tax liability directly. You will operate this particular approach. Okay. So whenever you are doing these calculations, just make sure that you remember the concept of extension of bands. So how does it work? There are two benefits that the person will get. One, the person will get benefit at source. So if the total amount is 3600 that she has paid, that means the charity has gotten a benefit of 4500 because HMRC has contributed 900 out of its pocket. This is benefit one. Benefit two is whatever is the amount of gross contribution, increase or extend your bands by the amount of gross contribution. So 0 to 37,700 becomes 0 to 42,200, and 37,701 to 125, 140, that also increases by 4500. Now, this is tax liability calculation after extension of bands. Okay, after extension of bands, as you can see, the amount of tax liability has reduced by how much? The amount of tax liability has reduced by 900. Okay, earlier your with the extension of bands, the liability is 8532. Without the extension of bands, the liability is 9432. Because of the extension of bands, you are saving your overall tax liability. Okay. And it's not a matter of coincidence, but it's the fact is that gross amount of charity into 20%, gross amount of charitable contribution into 20%, that is the amount of tax that you will ultimately end up saving. Now, this concept that we studied here, extension of bands, will be supremely helpful when we do pensions. So make sure that you understand how the benefit is given. Okay, practice this question properly. If you have any doubts, please let me know in the chat box, comment section. Okay, chalo. Let's see one more question. Okay. Shubhan and Summer each have employment income of 54,345. Summer makes a payment of 2,000 to a charity under gift aid scheme. Okay, so calculate the tax liability. Now I'm going to make it a little short for you so that you don't have to do the entire calculation every time. Let's calculate tax liability for Shubhan. Calculation of tax liability for Shubhan. Okay. What is his employment income? 54,345. Okay. And yeah, he Shubhan has not made any payment to a charity. Less personal allowance, 12,570. Okay. So what is your taxable income? 54,345, that is 12,570. Taxable income is 41,775. Okay. Now, how will you subject it to tax? The basic band is 0 to 37,700. So, non-savings, 37,700 at the rate of 20%. Now, after taxing 37,700 in the basic rate band, let me call it BRB, 37,700 into 20%. How much is still left? Out of 41,775, you tax 37,700 in the basic rate band. So 4075 is left. Non-savings 4075 at the rate of 40%. This is the higher rate band. 4075 into 40%. Okay. So how much will be the amount of total tax liability? Total tax liability will be 7540 plus 1630. Now, let's see the calculation for summer. Now, summer paid 2000 to a charity. Summer paid 2000 to a charity. Okay. So 2000 is the amount paid. Okay. That is outflow. Now, what will be the gross contribution? Gross contribution will be, it will be 2000 upon 80%, which is 2500. Okay. Now, the bands will have to be extended by 2500. I'll show you the original band here, and this will be the revised bands. Okay. So if original band is 0 to 37,700, then upper limit 37,700, add 2,500 to it, you will get 40,200. Okay. This is the revised band. Original band 37,700 1 to 125, 140. Revised band will be 40,201, and this will be 125, 140 plus 2500, which is 127, 640. Okay. Now, these are our revised bands. Taxable income is the same. Okay. That doesn't change, but the tax calculation will be different. The first thing I will do is I will do non-savings income. How much? Non-savings income of 42,200 at 20%. 42,200 into 20%. How much is now left untaxed? Total income is 41,775, out of which 40,200 was taxed in the basic rate band. So 1575 is left. This is my higher rate band. 630. Total tax liability 9070. 42,200. Sorry, my mistake. It is 40,200, and that is 8040, and this is the total tax liability, which is 8,670. So how much less did Summer pay? Summer paid 500 less. What was the amount contributed? 2,000. Okay. And our gross amount was 2,500. Okay. Pay attention to this. Now, this is something, which will keep on repeating over and over again. So it's necessary that you understand how the extension of band system works in UK taxation. This is a special feature of UK tax. I would say you will not find it in Indian tax. So don't try to draw that parallel. Let's look at one more question. Ekta has trading income of 1,56,000 and employment income of 12,000. She does not have any savings or dividend income. She makes gift aid payments to a charity of 47,000. Calculate the tax liability. First of all, let's calculation of tax liability for Ekta. So trading income 1,56,000. Employment income 12,000. So what is my total income? 1,56,000 plus 12. How much does that come to? 1,68,000. She makes gift aid payments to a charity of 47,000. Now observe one thing here. We'll have to work on the personal allowance bit also. If you remember the other day, we saw the whole discussion on personal allowance and reduction of personal allowance. How much is reduction of personal allowance? See, in this case, reduction of PA is adjust 50% of adjusted net income minus 1 lakh. 50% of adjusted net income minus 1 lakh. And what is adjusted net income? Adjusted net income is net income minus gross gifted donations minus gross personal pension contribution. Now, in this case, the payment made is 47,000. Okay. Payment to charity is 47,000. So, gross personal pension contribution is 47,000 upon 80%. How much does that give you? Check. 47,000 divided by 80%. That gives you 58,750. Is that right? So, what is your adjusted net income? Adjusted net income is, uh, sorry, this is gross gifted donation, not gross personal pension contribution. We'll see gross PPC later. Gross gifted donation. Okay. So this is 1,68,000 minus 58,750. What does that give you? It gives me 1,09,250. So reduction of PA is 50% into 1,09,250 minus 1 lakh. What is that? That number is 4625. Okay. Your PA will be reduced by 4625. So what is your updated PA? Updated PA is 12,570 minus 4625. How much is that? That's 7,945. Okay. From your total income, reduce updated personal allowance. How much is that? 7,945. Okay. After that, you will be left with taxable income. 1,68,000 minus 7,945, 160055. Now, another point is that what is the total amount of gross gifted donation? It is 58,750, right? So that means your basic and higher rate bands will get extended by this number. Let's write down the original bands. Our original bands are 0 to 37,700, 37,700, 1 to 125, 140, and above 125, 140. What are the updated or revised bands? This is 0 to, in 37,700, we want you to add 58,750. That is 96,450. Then 96,451 to, see, 125, 140 plus 58,750, 183,890, and then above 183,890. Okay, these are my revised bands. Now, how should I calculate my income tax? So, non-savings income 96,450 at the rate of 20%. Okay. Now, see, my higher rate band is up to 183,890. This person's taxable income is 160055. So very clearly he is a higher rate taxpayer. 96,450 into 20%. Now understand one thing, that this person has a taxable income of 160,055, out of which I already taxed 96,450 in the basic rate band. How much is left? 63,605 is left. Okay, so 63,605 will get taxed at 40%. 63,605 into 40%. How much is that? 25,442. So your total tax is 19,290 plus 25,442, 44,732. This question was important for many reasons. First reason, non-savings. So you have a total income of 1,68,000. There is a reduction of PA, plus there is extension of bands on account of gross gifted donation. So do this part really well, because this will form an important part of the tax calculations that we'll be doing in bigger questions.